Welcome to Markets Now. I'm Michelle Roque with Scott Varilek, Kooima Kooima Varilek. Grains are lower this morning, and we've seen a little bit of two-sided action already in the livestock futures. But, Scott, let's just start off with cattle, which are trying to rebound after a super ugly day yesterday. Lower cash and fear about this cattle line feed report really sank that market.
Yeah, thanks for having me. And we're getting used to these uglier days in the cattle. They've been blessing us with some red markets here over the last couple of weeks, and then yesterday was another one. So we've got this cattle on feed report at this afternoon, Friday afternoon, and ever since we had the last cattle on feed report, and that was a bearish signal for the market, and found some bigger placements, and cattle were coming in fast. And we've been talking about how this one was going to be bearish since that one. So it's been overhanging the market. And as we get closer to it, creating some nerves. We've got some bigger estimates for it. I mean, 106 estimate for placements, 102 on feed, 98 marketed, all negative kind of numbers that were thrown in there for estimates. And at least we see that ahead of it. We've penciled that in. We've priced some of that in. That's a big part of the break that we've had. So hopefully we, can kind of fight this off, even if we come in at those levels and we don't extend them to more negative numbers. Maybe we're going to be okay. But using that word hope in the cattle market, and that's always a tough word to stand on when you're talking about markets, is using the word hope to me.
Absolutely. And of course, the big question is, where are all these placements coming from? Is this imports? Where are they coming from?
We've got I'd say a little bit of both here. Yes, there's going to be some increase coming from Mexico, and a little bit of uncertainty what's coming out of Canada. I've had that question a little bit here because it was only a couple of months ago Canada was down here buying our feeder calves and pulling them north because their government program is trying to boost their beef production. So are some shifting back down? I don't know. I don't have enough evidence to say that we've got a bunch coming from the north. But definitely from Mexico. Yep, there's some numbers coming there. But I think, to me, a big part of the placements is we were at some of these high prices, and there was a little bit of smoke worries on some of these markets, and where there's smoke, there's fire. So I think cow-calf guys in the United States wanted to get their cattle sold. They wanted to cash in early. Let's get these sold. They want to cash in. They've had a long run of tough years and low profitability, and they had a home run set right in front of them. So it was, let's go touch the bases and send them to town. So I think we just got shoved with all of these placements at once. I think these feeder calf runs happened hot and heavy, came fast. So I think we're already going to start seeing some of those numbers dry up a little bit. I don't think the United States just found a lot more cows, a bunch more calves coming from the dairy industry. I don't know that those numbers are that increased. I just think they came early. So we're going to see that later. I think we're going to turn the page into the next quarter and get to January and say, okay, I'm going to start looking for some feeder calves and these backgrounders. And I think those numbers are going to be surprisingly tight when we get there, because I think they're already in the feed yard. They're already found a home. So it's a little odd right now. Some of these feeder calf prices have really broke quite a bit. And you can buy some out of the sale barn and put $100 bill on them and hedge them. I mean, that's just such a rare instance for the cattle market. But some of these feed yards, I guess these northern sector where I'm at here in Northwest Iowa, we're full. All of them have gotten placed at the same time. So trying to find a home for some of them. If you've got a home, yep, there you go. You can buy some feeders, lock them in for $100 a head winter. That's a pretty interesting little nugget there.
Yeah. So look at a chart. Where do we got to hold? I know last week's lows are important, but what else are you watching?
Yep, last week's low is very important, because we've had our 3 legs lower. Your Elliott wave talk. That's how a market can correct is in those 3 legs. We've had 3. Now, are we going to make a 4th or not? I mean, if we take out these lows that we just made last week, that's going to be tough sledding. But for the long-term look, I see 171.97 for the front month as a pretty important spot for me. That's going to be our 2014 highs. So I'm looking at that as pretty firm support, and it's got to kind of hold that. I think if we take that out, it's going to be tough sledding. And I know that 172, 170, that's still a good price. I mean, we were very excited when we got there the first time. And so I got to put it in perspective that, yes, that's still a pretty good high price for us. But I don't think if we take that out, I think some of the funds are going to look at these long-term charts and they're going to start to put some bigger measurements on it. And we've had just such a nice steady rally since 2020 that it's kind of scary when you put retracements on a market that's went from 80 cents all the way to $1.80. You can imagine how scary some of those retracements are. So the market's got to decide if this is the big one or not, if we're really going to correct all the way down to some more serious correction. And to me, I think the tight supply is going to have to kind of bail the market out, and we might not be able to kind of see some of that tight supply until later. So cash market's been okay. So I mean, it's lower, but it's not a wreck. So I think there's two spots we can look for this market. The front month, for one, we've got some 178 to 182 cash happening. And so you've got a discount with the discount board. So maybe that's an opportunity. And if you're the long-term friendly guy, you're going to look at the next August feeders and say, okay, if we're sending all these heifers into the feed yard again, we're going to have tighter feeders next year than we did this year yet again.
Yeah. Well, as we speak, we are seeing cattle kind of drift a little bit lower here and hogs. Well, we had an update yesterday while cattle were going down. It seems like, man, every time we get a down day in the cattle, we get those cattle hog spreads. Beyond that, where's the hog market going?
Yeah, that's been fairly obvious that the hogs and the cattle have been kind of spreading against each other. You've got a hog market that, fundamental wise, we're feeling a little negative, but when the cattle are lower, the hogs are able to fight their way back higher, even though they might get some pretty negative news thrown at them. So they're trading a little better than what I think they should. So I think that's just a part of those cattle hog spreads. But when I look at the fundamentals of the hogs, I don't know that I'm necessarily getting very friendly at all. It's a pretty big shot of hogs coming from Canada. The open market hogs are flowing into here. It seems like we're pretty full in the barns around here to try to find a home for them. Because when you can buy hogs and put them on feed, make $10, you want to do that all day long, but there's just not room for them. So I think we're pretty full on supply, and we've got weights over year ago levels. We're over 3 pounds over year ago levels now on those carcasses. So that's also pretty heavy. Just not getting myself very friendly on these hogs. So they did revise the kill a little lower. There was some plant issues there to get through, and not necessarily backing up the hogs, but that's never a good sign when you do back up a few of them. So,
and I mentioned grains are all lower and soybeans are kind of leading the charge here, but we're looking at some rain chances in Brazil. So we're taking out some weather premium, you think?
Yeah, that's what we're going to be trading in the soybeans. They're the lead dog for the grains this winter. That's got the most action to be had. So I think the funds are going to be watching that pretty close. We've had the pretty nice rally on the drier weather, and now we move the rains. So we're locked into a weather market for these soybeans, and that's the front story for the week here. So they had pulled some rains ahead. There's some rains, but it's going to be dry after. I don't think it's a market that's just going to give up on some rains hitting over the weekend here. There's going to be plenty more of weather to trade. They still have a little bit of room to break to hold an uptrend line if we're going to draw some lines on the chart. So I don't think that party's over. I think that they're going to just have a little correction here, and they're going to get fed the news that they want. You're going to be able to find it being too dry somewhere. And maybe too wet somewhere. You always can find what you're looking for. So I'm expecting some more too dry stories to hit that market. I don't think that the weather market's going to be done there.
Okay. Yeah. And corn is kind of a follower at this point, but I don't know. A lot of guys I talk to say there's some extra bushels coming to the market here. And so that kind of continues to keep a lid on things, doesn't it?
Yes, I would say that's surely keeping a lid on it. We're just finding bushels, finding more corn. I think we're pretty full in quite a few areas, and that area is getting bigger on how much corn we have sitting around, and then the piles, and this facility is too full. So I think that we've got a pretty big supply, and we're going to have to find out where demand can really kick in and move some of those bushels. So you would need some more barge movement, I guess, to to see if we're going to really start shipping extra bushels away, because I think we have a lot of it to do that. So I think it's just going to be a struggle. You're down 5 one day, up 5 the next, and then down 5 the next. So we're not really going anywhere in this market. And I think as these bushels, add up and sit and look for home, I think the easier path is for it to just kind of slowly bleed lower, I guess, because we're just not going to have a tight supply for a while, and it's going to need a weaker dollar. It's going to need higher energies or some other kind of story to kind of boost that demand on that corn market.
Either that or a bigger problem weather-wise in South America or something like that. So,
right.
Well, hopefully we hold this week's lows, because it was interesting to watch us go back and test that area again. So.
Yeah, it looks like we got to use the word hope on corn and
okay.
So, all right.
Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That's Markets Now.